This is Victor. In this video, I'm going to cover Prudential. This is a life insurance and financial services company that you may be familiar with. I've known of these guys for a long time. I've seen their commercials, and I started investing in Prudential a few years ago. It's been a good thing. They pay a really good dividend, and you can catch this stock in really nice dips, so you can buy it at a discount. Let me tell you more about this company. So interest rates have gone up significantly, and companies that earn money from a higher interest rate are going to do well going forward. And Prudential happens to be one of those companies. They have group insurance, they have individual annuities and life insurance. What they do with the premiums is they get to invest them and make more money. And with a higher interest rate, they're going to make more money. So I'm optimistic that Prudential is going to benefit from higher interest rates, and that's a good thing for 2022 and 2023. The stock price has really moved on Prudential up and down, but overall it has an upward trend if you follow the peaks. And what's nice about it is, especially right now, there's been a real downward trend. So we are in a dip for Prudential. You can buy into a company that has a nice dividend. I certainly buy on dips so I can continue to add to this position. I believe that Prudential is discounted by 66%. Let me tell you how I come up with that number. I like to value companies primarily on free cash flows. Prudential produces incredibly high cash flow. If you look at their cash flow for last year, it was 9.8 billion. This is a $38 billion market cap company. So it produces above 20% in free cash flow per year. If I evaluate just on free cash, it's really 167% discount. So to be more conservative, I also compared it to book value and price earnings value to really calm down that number. And I get to 66%. The free cash flow rate, I do it by calculating the free cash flows over the next 4 years using I believe a flat growth rate of 0%. And then I have a terminal value of this company existing into the future. Those numbers add up to $102 billion of value if you just look at the cash flow. Prudential has grown 4% over the last 5 years. Nice steady growth rate. Free cash flow is great, almost 10 billion last year. And that really equates to 26% of their revenue ends up being free cash. So that's awesome. Nice dividend of 4.7. And they also rebought shares, $375 million worth of shares. In 2022, Q1 wasn't great. Revenue went down by 22%. It was the other revenue category that caused that decrease. And their earnings per share dipped to negative 10 cents per share. The management is guiding that they're going to grow for the remainder of the year. So that's good. And they're going to continue to pay that nice dividend. Their earnings call, even though they had negative revenue growth, the stock still went up 1%. So investors really believe in the company. This is a profitable, growing dividend payer. It's good stock to own in 2022 when you see high growth stocks really get punished. These guys are going to benefit from higher interest rates. That's my belief. Even though all those things are in play, I'm going to hold till the next earnings call. One of the reasons is I already have a big position in Prudential, so I have plenty of stock in Prudential. Second is I want to see how things play out. That first quarter, caused me to pump on the brakes a little bit and wait for them to recover and show a good Q2. Thank you for watching my video. I appreciate it. I hope you found it interesting. If you can like my video, I'd really appreciate that. And if you like this content, consider subscribing to my channel. Thanks again. Good luck investing in 2022.